financials, tech, and energy. Our next guest is Chris Brigati, Chief Investment Officer at SWBC. Chris, thanks a lot for joining us. Why don't we start with the financials? Certainly the U.S. financials got a big boost from the outcome of the U.S. election. Is that one of the reasons you like this group?
Definitely, the financials should benefit from what's going on with the election with the Trump administration. But also, we finally have an upwardly sloping yield curve, which definitely benefits anybody in the financial space. And historically, they've seen strong performance when the interest rate curve starts to steepen.
And within the financials, are there sub-sectors that you like? For instance, the regionals, the Wall Street money center banks, the insurance companies?
I think the money center banks and some of the larger size traditional banks as well. Once you get down into the mid-tier banks, you have to be thoughtful and careful about some of the challenges with their CRE loan portfolios and those sorts of situations create a little bit of different dynamic, and they're a little more susceptible to some difficulties as well.
Sorry, which loan portfolios might be problematic at the regionals?
Commercial real estate. If they're heavily invested in commercial real estate, you have to dig deep into the details to understand how deep and how difficult some of their loan portfolios could be in that space.
Will this be a year you think that we see M&A activity in the financials pick up? Will we see, for instance, some regionals purchased by larger banks?
I think so. I think you can also see some consolidation down at the lower end as well. Some of the smaller banks consolidating and combining to be slightly larger. I think that's probably a little bit more likely than some of the larger banks gobbling up, but I expect consolidation across the board.
Okay, within technology, you like the software sector as well. Tell us about your view there.
You know, software, look at what's happened lately in the past several years. Software has really become a growing aspect of the market, and the need for it is becoming increasingly important from a compliance and regulatory standpoint at every firm, let alone financial firms. But everyone kind of needs more software support and more need for it. And then when you're talking about cybersecurity, that's a real challenge, and that's hitting everybody across the spectrum, whether it's companies, municipal entities, hospitals, things like that. So you have to really bulk up and be aware of your software requirements to be able to manage through any potential cybersecurity concerns one may have.
What about consumer cyclicals? That's another group that you like.
Yeah, you know, the consumer remains robust and strong. I think we've seen that, and we've seen a strong pickup here into year end as well. And so I expect that to continue for the foreseeable future, at least. Consumers are going to continue to spend money. And the need and the desire to continue to grow the economy is there from a macro standpoint. So it's kind of a circuitous circle in terms of where will the consumer be and how will they continue to spend.
Do you expect discount retailers to continue to do well? Walmart has been the flagship story there.
Yeah, I mean, Walmart is really kind of the one, but I do expect to see some growth and some opportunity at the higher end as well. When you're talking about the higher end luxury brands, if the consumer is going to continue to spend, the high-end consumer will take that to another level as well. So I expect a little bit of a differentiation there when you're talking high-end consumer staples. You're
also a believer in the energy theme and the energy demand that is going to be created by huge AI-related data centers. So what subgroups of the energy sector do you think are best poised to benefit there?
Anyone that is really demographically set to take advantage of some of the growing need for energy throughout the technology space. When you look at areas of the country in the Sun Belt especially, you're looking at the need where there's a growth and there's an opportunity for some of those companies that are in Sun Belt areas to be able to provide the needed requirement for the growth in technology. And if you look at AI in terms of search, it takes about 10 times the amount of energy to do an AI type of search versus a Google search. The money that is required to be able to be put forth to be able to grow with that and need to require energy is really important. And so I expect that to continue, and I expect those energy concerns to be a growing opportunity.
Okay, in terms of risks, you think a surprise uptick in U.S. inflation is a real possibility. What would be the consequences? Is it conceivable the U.S. Fed raises its benchmark interest rate in 2025?
I'd say conceivable, yes. I'd say it's a low likelihood at this point, but I think we're seeing some of the writing on the wall lately with regard to some of the data that has come out. And the fact that we just recently saw the Fed cut their forecast for 2025 from 4 cuts to 2. I'm probably going to be taking the under on the 2 at this point now. I expect there to be some challenges I expect the Trump economy and the Trump tariff situation to become a little bit of a challenge, and I expect to see how the economy is going to work through that.
Chris, thank you very much for this conversation. That's Chris Brigati, Chief Investment Officer at